Are you sick of your 9 to 5 job? Do you want to make money even while you sleep? Then sit back, relax, and let's talk stocks. You might have heard some terms thrown around like stocks, shares, securities, and equities. But what's the difference?
Same, but different. But still same.
The stock exchange is a marketplace where shares in corporations are issued and traded. In a nutshell, the stock market provides a platform where buyers and sellers can issue transactions to trade shares. When a company decides to transition from a private company to a public company, they perform what is called an initial public offering, or IPO. An IPO allows the company to issue new stocks into the public share market to raise capital from public investors. The raised capital can then be used to give the company a greater ability to grow and expand. Purchasing stocks makes investors partial owners of that business. Their investment helps fund the business's initiatives by providing them with cash to grow the business. Now, if that business grows and more buyers want to purchase that stock, the demand for that stock increases. When the demand for that stock increases, the price at which investors are willing to pay for it also increases, therefore driving up the share price. However, the reverse can also happen. If investors think their stocks are no longer a good investment, they'll sell their stocks before the company loses more value. As stocks are sold and the demand for that stock declines, the share price also declines. So the share market is in this constant flux of being driven by the variables of supply and demand. When you first start investing, it can look something like this. You've been eyeing this share for a while now, and you see it edging up slowly every day, so you decide to buy it. It then might increase a bit more, and you say, good thing I didn't wait. You might even top up again when the share price drops. But when it's crashing, you say to yourself, I'm going to wait. I'll sell when it goes back up. Then it drops even more, and you're like, so you end up panicking. You let your emotions take over and sell everything. It then drops further and you sigh with relief. Phew, good thing I sold everything. After a period of time, the share price rebounds, as it mostly does. It then starts recovering. And you buy again. What have you done here? You've just joined the buy high, sell low club. Whereas if you followed Warren Buffett's advice and bought in the dip, you would have gotten shares at a discount. So why do you need to start investing today? Asset classes such as stocks, bonds, and real estate tend to grow faster than the value of cash. If you put your money in the bank in a high interest savings account, on average you're earning less than 1% interest on your savings. Whereas the average stock market return is about 8% per year, minus 2% when factoring in inflation. Now this return varies slightly depending on the stock exchange you're trading in, but it is a very achievable number and much higher than the return you would get from a savings account. But it does come at a small cost. Investors need to tolerate short-term volatility and fluctuations in share prices. Generally, there's a risk-return trade-off. The higher the risk, the higher the return. However, higher return is only potential return, not guaranteed return. Making big losses is just as possible. You're telling me I can achieve an 8% annual return on shares if I just bear with the daily changes in share prices? Sounds kind of sus. Yeah, definitely. All you need to do is sign here. In all seriousness, guys, you need to start investing as early as possible because compound interest provides phenomenal returns over the long term. There's often a misconception that investing is a get-rich-quick scheme. It's not. Investing is a way to build interest on interest returns and compound your wealth slowly but surely over many, many years. Even in the midst of these uncertain times, with COVID, with the US elections, you should invest your money and let it work for you. I don't know what's going to happen in the next few days, weeks, or months, but I do know 10 years from now, none of this would have mattered, and the world would be in a better place than it is today. In 10 years from now, you'll regret not having started today.